Good afternoon to you all. I'm not sure who I should recognize. The chairman, Mr. Brett Hobday, the president. You're ceremonial president, you tell me.
Right.
Okay. Distinguished members of the Trinidad Union Club. Let me thank you all for inviting me to this session. Remember when I started preparing for it, I wasn't sure what I should talk about. I ended up agreeing to talk about medium-term challenges facing the Trinidad and Tobago economy. When I told one of my colleagues what I would talk about, he urged caution, since he warned me that I am becoming famous for bad-talking the economy. In an effort to calm those concerns, and certainly to clarify that's not my motive, I thought I would start by identifying some of the things that are good about our economy. And believe me, there are many things that are very good. I see Mr. Ron Harford is staring me down. That's not... Now, what are some of these pluses? Now, we have shown resilience in surviving 3 years of economic decline without too much dislocation. Our unemployment rate at its height during a 3-year period was about 6.5%, which isn't bad by international standards. If you look at Europe, it's around 10. Spain is 18 to 20. Greece must be something close to that. And even the US, that has shown significant improvement in their labor markets, are now boasting of 8.3%. So our 6.2 isn't that bad, assuming it's the right number. Even through the downturn, we continue to increase our international reserves, which now stand at a healthy 10 billion, the equivalent of more than 1 year of imports. In addition, we have US 10 billion. In addition, we have US 4 billion in the Heritage and Stabilization Fund. Our public debt, which is one indicator for economic vulnerability, is low by international standards. It's about 37% of GDP. The average for the rest of the region is between 80 and 100. In Europe now, you're reading about 150, 130, and so on. Even more impressive, our external debt is a very manageable 10 billion US dollars, which is about 6.5% of GDP. Our significant foreign reserve buffer, combined with our low public debt, has earned us an investment grade rating from Standard & Poor's. In fact, we are the only country in this region with an A rating from the international rating agencies. Our financial system has withstood any major contagion from the Clico crisis. Our banking system is well capitalized. Non-performing loans have increased recently, but even so, they are at around 6.5% of total loans, and that's certainly not a crisis level. In addition, the banks have more than adequate provisions. Following 3 years of decline, we are now beginning to see a modest economic turnaround in 2012. The bank's projection of 1.5% growth in 2012 is predicated on a normalization of oil and gas production following reductions in 2011 due to disruptions from maintenance and security upgrades, an acceleration in public spending, including on infrastructural works, and a resumption of public sector residential construction, and the continuation of the increase in bank credit, which has begun to pick up. Bank credit to businesses are now positive after 15 months of decline. The increase in bank credit, I mean. Now, it's too early to say how much the expected boost to residential construction is being affected by the TCL crisis and the shortage of cement. I suspect that there's going to be an impact. I don't know, it's too early to say whether even the prospect of positive growth this year would be threatened. While the short-term economic outlook may have improved, the medium term poses a number of challenges which must be successfully addressed if we are to achieve rates of growth that are closer to our potential. Over the past 3 to 4 years, as confidence and private sector demand have languished, public spending has stepped in to support aggregate demand. The budget for the current fiscal year, for example, envisages a fiscal deficit of around 5% of GDP, but that is predicated on an oil price of US $75 a barrel. As oil prices and oil revenues are likely to be higher than in the budget, we may well end up with a lower fiscal deficit, perhaps in the region of 3 to 3.5% of GDP. But even so, this would make it 3 fiscal deficits in the last 4 years. And over that period, our public debt increased from the equivalent of 24% of GDP to what I just said was reasonable 37% of GDP. It is certainly my opinion, and it's a widely held view, that our fiscal strategy needs to change over time to aiming for fiscal balance or even a small surplus. And I think that's necessary if we are to increase savings for future generations and maintain our comfortable public debt position. But this is particularly important given the uncertainty facing our energy sector. We must face the fact, however, that achieving fiscal balance while maintaining an adequate level of public investment is likely to entail some difficult decisions, for instance, on non-energy tax revenues. I'm hearing word about a property tax, again, according to the newspaper, and on containing central government current expenditures, which have increased significantly over the past few years, largely because of increases on transfers and on subsidies. With fiscal policy expected to play a supporting role, the private sector will need to resume its traditional role of driving economic growth. And this leads me into the discussion of some of our major challenges. Let's first look at the energy sector. The facts are that the latest Ryder Scott report suggests that proven gas reserves currently stand at 9 years of production, and our oil reserves at the equivalent of 14 years production. We know for a fact that oil production has declined sharply over the past several years, largely because of, or during which time, there has been limited exploration activity and investment in the sector. Recently, you may have read reports of a promising oil and gas find, but even if this materializes, it will take several years for it to be brought to fruition. Some analysts argue that we face the challenge of adapting our energy sector investment framework and the fiscal regime to the evolving landscape in order to facilitate new exploration and development. There's a strong case, or people argue, that the current incentive regime is actually pushing companies to look at other fields. I must confess that this is something about which I have no expertise. Prospects for our gas sector are equally uncertain. This year, the industry had some success in redirecting gas exports from the US, where prices had plummeted, to more lucrative markets in Japan and in Latin America. Over the medium term, however, the ongoing proliferation of shale gas technology is expected to lead to a major increase in gas output, depressing LNG prices worldwide. And that will certainly have implications for us. What about the non-energy sector? The record will show that we have been grappling with the conundrum of diversification for many years, with very little to show, save for the expansion in the downstream energy sector. This year's budget revisits the theme with proposals to improve the physical and technological infrastructure, to foster downstream manufacturing, to strengthen the business environment, and to involve the private sector in private-public sector partnerships and through public offerings. It is a consistent policy framework. We'd have to wait to see if the strategy works. I should say, however, that the study of the more dynamic, developing, and emerging market countries suggests that a successful diversification involving increasing exports to new markets requires productivity increasing behavior at both the private enterprise and the governmental levels. This effectively, in our case, involves serious structural changes. For what it's worth, the latest Doing Business report by the World Bank gives Trinidad and Tobago uncomfortably low marks in several categories of business facilitation, particularly in obtaining building permits and registering property. The survey also indicates that we do not rank well with regards to labor market efficiency, nor with regard to the quality of our public administration. And this same survey sees the high level of crime as a problematic factor for doing business. The local private sector also argues, and they have pointed out, the inefficiency of our ports as a main factor, arguing that our ports are even more inefficient than those in the region. Now that makes it difficult for me to believe, but that's what the private sector says. All these issues, the crime, the ports, the poor business facilitation, affect productivity and must be addressed urgently if we are to find our niche in this new, increasingly competitive global environment. You know, to be frank, we are facing the challenge of reorienting our non-energy sector in order to achieve competitiveness. But structural change is not easy. Most times it's painful. It requires major changes, major shifts in attitudes and in traditional behaviors. Sometimes it requires that we abandon our comfort zone and try new things. It requires sometimes that we seek to exploit technology, look for new markets, and adopt entirely new paradigms. The example of more successful emerging economies in Latin America and in Asia suggests that the market mechanism alone cannot deliver structural change. Structural change needs to be planned and implemented through cooperative arrangements among the main stakeholders: the government, the private sector, labor, tertiary educational institutions, and even NGOs. In fact, structural change requires a certain kind of mobilization of the society at large. And the planning and the cooperation may need to encompass a wide range of activities. For example, joint selection of target industries, joint ventures between the government and the private sector, research and development involving various sectors of the economy and our tertiary institutions. The search for new markets, for instance, is a governmental function as much as it is a private sector function. Only the government could sign free trade agreements. So there are many areas in which there could be active government-private sector collaboration. You know, the private sector in Trinidad and Tobago has made a sterling contribution to our current level of development. But because the world has changed so much over the last 2 decades, they are being called, and they should be called, to lead the charge again. Entrepreneurs need to move out of their existing comfort zones and to invest in new industries for export, not only to CARICOM, but to the more dynamic markets. It is worth remembering, ladies and gentlemen, that following the economic crisis of the 1980s, our local private sector took up the challenge, identified new export niches, and established an overwhelming presence in the CARICOM region. We need to recreate this process, but on an even bigger scale. You may have seen one of the bankers in a recent speech lamenting that our private sector was not exploiting the efficiencies inherent in e-banking and e-payments. We at the bank, we're still surprised. We're still seeing people writing lots of checks for lots of money, when the use of electronic payments, the RTGS for large payments, and the ACH for smaller payments could result in faster payment settlement, reduced risks, and lower transaction costs. So I take another example. For years, we have complained that the number of listed companies on the stock exchange has remained, or has declined, has even declined. In part because firms are reluctant to open up and to embrace the disclosure and governance arrangements applied by public listings. These are but 2 examples of inertia, the type of inertia that the private sector needs to get over. We also need to introduce a new paradigm of industrial relations. The current system of wage negotiations is overly adversarial, with the sentiment that only an outcome with blood on the floor would mark success. But the contrary is true. It is only via collaboration and a shared vision, linking productivity with wages as well as profits. It's only through such an arrangement will there be a truly win-win result. In some countries, formal tripartite arrangements and productivity councils have been utilized to this end. In some companies, wages have been strictly tied to the company's output. In others, variants of profit-sharing arrangements have been successfully adopted. The specific formulation could vary depending on the company and our specific country circumstances, and it could be modified over time. The overriding objective, however, would be to provide some formulation that would strengthen the value of output produced by the workers, which would ultimately form the basis for wage settlements. The honest search for such formulations would, I believe, avoid the negative impacts of the regular rounds of acrimonious wage discussions every 3 years or so that currently form a typical feature of most sectors. I've tried to make the point that particularly in light of the uncertainties in the energy sector, we face the challenge of diversifying and increasing the dynamism of our non-energy economy, as well as improving productivity performance. All the emerging countries of the world are facing up to this very challenge. But I guess those that don't depend heavily on energy or other raw materials need to pursue these advantages with a greater sense of urgency. I must admit that some of the changes that I talked about are already taking place. However, I should note that successfully confronting the range of challenges that we now face and confronting them quickly may mean the difference between limping along at growth rates of 1 to 2% a year or achieving a sustainable growth rate that is more in line with our long-term potential. Thank you very much for listening to me so attentively.
Being chosen to ask you the questions as members today.
Thank you.
What fiscal incentives do you recommend to encourage those companies that earn foreign exchange, as this would be the lifeblood of our economy, well, as a reiteration of what you said earlier? And so let me cut that short by saying or asking, are we putting the right incentives in place to secure our future?
Okay. Look, in principle, the most effective fiscal incentive, and it's not fiscal, the most effective incentive for promoting the growth of foreign exchange is the exchange rate. Because if you have a competitive exchange rate, give other things being equal, you're able to export to a market that's, that's growing. The issue is, do you think that the exchange rate is appropriate? Do you think that the exchange rate is a constraint to efficient exporting? I don't think so. But you in the business sector can tell me. I don't think that that it ever works to give special fiscal incentives to exporters. I've worked with the IMF for 30 years, more than 30 years. And I've seen countries that give export credits and things of the kind. These things are, to say the least, difficult to administer, and they lend themselves to exploitation. If you have a good exchange rate, in the final analysis, it is the challenge of the exporter to increase productivity, and that it puts pressure on the exporting company to increase productivity because he has to compete with everybody else who is doing the same.
So since you have gone to the exchange rate, give me the opportunity to ask two supplementary questions about the exchange rate.
Yeah.
And what is your TT US dollar exchange rate forecast over the next 3 years? And importantly, what are the limits that the central bank is prepared to defend, and what tools do you intend to deploy to maintain that target band?
Very good questions. The chairman told me that I had to take your questions. He never said I had to answer all. I said, I'm not, as well as I know, I'm not going there.
So, given former Senator Mary King's 2007-2008 arguments in favor of depegging the TT dollar from its then trading ban, were we right to maintain the US TT dollar trading ban that we have? And you having worked on the Jamaica desk of the IMF,
yeah.
Do you support the dollarization of our economy as a way of keeping politicians in check?
But let me answer the first part. If I support the peg to the...
Well, you remember Senator Mary King, I don't know whether you bothered to read any of our articles. She made some arguments in favor of abandoning, really arguments in favor of revaluation.
Revaluation?
Yes.
Yeah. But why would you revalue if your whole objective is to promote the non-energy export sector? Why would revaluation only helps the importer? It doesn't help the expansion of export. So in a way, that's a non-argument, revaluing.
About dollarization?
Why should we dollarize? I mean, you dollarize when there's a lack of confidence in the local currency.
But isn't this what Europe is doing now in a sense, in the limits that Europe has placed on its members is in effect preventing budget deficits? I mean, the deficits are outcome of exceeding.
Well, that's not dollarization.
Well, I mean, we're not talking about dollars, but we're talking about control.
No, what Europe has done, Europe has recognized, as we would recognize if we have a similar regional arrangement, one market. But once you have a common currency, what you do is you take away the room for maneuver of the individual countries, right?
Correct.
Europe was supposed to have an agreement whereby everybody stood by a fiscal deficit of 3%. Okay? But because they lost the competitive edge, because they found themselves in all sorts of difficulties, they had to run larger fiscal deficits, which they hid. The average fiscal deficit in Europe, the average the average fiscal deficit in US, now that in Europe, now that in the euro, now that they have put it under greater scrutiny, is 6, 7, 8%, even though they had signed on to an agreement of 3. The average public debt in the euro is over 100%. So what was happening was they were running large deficits and borrowing. And that is why they find themselves in this position.
But wouldn't dollarization act as a check against our politicians?
No, but dollarizing, if you want, you must find an easier way of curbing excesses. That is throwing out the baby with the bad water, because once you dollarize, you have taken away all room for maneuver in terms of economic instruments. There's no monetary policy, there's no fiscal policy. Are we that desperate?
You wouldn't need a central bank.
You don't need a central bank, but I am past retirement age. It doesn't matter.
Another question, sir. Seeing that there has been a de facto devaluation of the Trinidad and Tobago dollar against the US dollar from 6.30, with banks offering, well, 6.40, 6.46, and because of what our writer describes as the grossly inadequate supply of US dollars available to importers, investors, etc. Why are the same banks selling Canadian dollars way above the international rates? I think the argument here is that there's almost parity between the Canadian dollar and the US dollar, while when you go to purchase it in the commercial banks, what you're paying is a 5% premium invariably. And what is your bank's position on this matter?
Let me. There are lots of questions you have. Lots of questions, but let me take them in turn. You know, I talk about a whole new paradigm and changing attitudes and changing ways we look at our economy. I think one thing that we have to change is to look at the exchange rate in terms of the convenience that it does for the importer. The purpose of our exchange rate is not to help the importer, is not to make imports cheaper. And that's a quantum change that we need to get around. If, given the situation we are in, with the energy sector, with all the uncertainties in the energy sector, we should be promoting exports, non-energy exports. And if you want to help the non-energy sector, you want a more depreciated exchange rate.
But what is the justice or the justification or the equity in having a 5% premium on the Canadian dollar vis-a-vis the US currency?
Let me give you the institutional answer. The bank sets the exchange rate with the intervention currency, which is the US dollar. The bank has nothing to do with the availability, the central bank, with the availability of other currencies, and the exchange rate for other currencies are set by the commercial banks as the cross rate. They set that. So what we do every day is define an exchange rate that we would deal with in US dollar terms. That's what we do.
So you're not concerned about what the commercial
That's the cross rate. No, that's a cross rate. That is something that's determined by the banks. Now let me go further. When we sell foreign exchange to the banks, we sell US dollars. The banks need to stock up on all other currencies as they see fit. That's not our business. So the banks would decide how much euros they have, Canadians they have, because they make a judgment as to what the demand for these currencies is, and they stock on those currencies.
Thank you. Can you identify any bubbles in the local economy? And specifically, have you observed any bubbles, or do you have any concern about the commercial and residential real estate market?
Yeah, I'm looking for a house, so is there a bubble now? I don't know. There certainly was, right? I would put it differently. Some people had expected house prices to decline consistent with the slowing down in the economy. We don't have a very reliable indicator of house prices. The indicator that we have suggests that prices in a certain price range have been coming down, but prices at the top of the scale have been doing so, but much more slowly, if at all. Right? Now, I wouldn't put my neck on that, but our indicator shows that there's a certain range, and range meaning both geographical area, right, as well as price range. In that certain cohort, prices have been coming down, not as in the US or in the developed world, but that certainly beyond that range, at the higher prices, that prices have been sticky. That's what our figures show.
So what you're pointing to, sir, is possible deficiencies in the statistical method and the CSO figure?
Trust me, we have no, that's something we did. We do lots of things wrong.
Okay.
No, that house price indices under any, in any economy are difficult to come by. We tried to introduce this index 2 or 3 years ago, and it's a learning process.
Any other bubbles, sir?
I don't know.
A possible bubble?
I don't know where. I can't think about one, but you can tell me. I mean, certainly wages, no. Wages, no. I don't think there's a wage bubble. There's absolute craziness in the industrial relations climate, but I don't think there's a wage bubble.
Are you concerned about executive overcompensation in disproportionate compensation in relation to productivity in some parts of the state public sector outside of the civil service, given the poor value evidence and its knock-on effect on the private sector, fueling a drive for parity between public sector and private sector executives, and its effect to distort certain markets like one that maybe we just spoke about, and ultimately the effect on competitiveness.
But I mean, when you're talking about competitiveness and wage levels, you hardly look at the executive level, because invariably that's a small part of the total wage bill, right? I don't collect information on executive pay. What's his name? Holik Rajkumar. Holik Rajkumar collects that. I don't know. I don't know what. I mean, look. Let me go further. I know that the senior civil service ranks are underpaid. I know that. The senior civil service ranks. Now, having said that, clearly there must be a way of linking salary to productivity, right? But I'm not sure that the salary levels that now characterize the senior civil service rank, that they are conducive to recruiting and for maintaining talent. I'm not sure.
So do you accept the statistic that the central bank, the CSO gave recently for up to 2009, that the average median wage was $4,000? Sorry, that 80% of the population earned $4,000 per month.
I don't know.
I think that's an accurate figure.
I don't know. To be honest with you, I don't know. It sounds funny to me. It sounds funny to me.
Another question, Mr. Governor. What is the state paying on its most recent external market borrowings? And could it have both minimized our exchange rate risk exposure and assured local depositors more favorable deposit rates by borrowing more locally?
The last time the state borrowed abroad is many, many years ago. In fact, there was a small refinancing. I think I mentioned inside here that if one of the strengths, I don't know if it's a strength of our economy, is that our total external debt is 10 billion, 6.5% of GDP, 10 billion US dollars. The state has not been borrowing at all. I saw a statement recently from the Ministry of Finance that they are thinking about a 500 million US placement or something like that. I don't know how authentic that point is. But if there's one thing that we can't be fingered for is excessive foreign borrowing.
Well, this leads naturally to another question. Why doesn't the central bank report to the nation on a regular basis? Why aren't the minutes made public? Why does it appear that the business of the central bank is done in secret? It's not my question.
No, that's okay. That's okay. I thought you were tired seeing the central bank reporting. Seriously, the central bank has an inflation repo rate announcement every month. The central bank has, for the first time, two monetary policy documents a year, two financial stability documents a year, and the governor of the central bank speaks far too often all over the place.
How about public minutes, Mr. Governor?
What minutes you want?
Well, I know there's a practice in some jurisdictions, like in the US, where the Fed makes its minutes public.
The Fed makes its monetary policy minutes, not its minutes, its monetary policy minutes public.
And do we have the equivalent of that?
No, not really, not really. No, not really.
Last question, sir. Both Barbados and Grenada have filed criminal actions against some of the PICO directors arising out of the collapse of the companies in those territories. Yet the Central Bank of Trinidad and Tobago, as a regulator in Trinidad, which is the home jurisdiction of the PICO group, has done nothing in the way of instituting either criminal or civil proceedings against even one person, not even to disqualify any of the directors from being able to become or remain a director of another company. Is this not an indictment against the regulator for not even appearing to try to do something to bring the persons involved to account?
Sir, I'm assuming that you don't live here. I'm assuming that you, because if you lived here, I mean, you would have realized that the only action that has been filed so far, it was in June last year, was a massive civil suit that the central bank and CLICO filed against Lawrence Dupree, Montai, Dalco, and Stone Street.
With a response like that, I'm compelled to ask this more absolutely final question. Both Bernie Madoff and Alan Stanford have been investigated, tried, convicted, and imprisoned. Yet the masterminds behind the CLICO debacle are still enjoying their freedom using money that is not theirs. How do you think this situation reflects on the Central Bank of Trinidad and Tobago as a regulator?
There's a division of labor between the central bank and the DPP.
Thank you very much, sir.
Any questions from the floor? Ladies, gentlemen, members? Steve? No questions from the floor?
I will ask a question specific to my industry, which is the insurance sector. Over the last couple of weeks, my office has been meeting with many of the executives of the insurance companies, specifically with regards to directors and officers' liability. As you know, we're very close to amending the Insurance Act, and certainly the central bank has been really pushing that, and I think the insurance sector is very grateful for the revisions that are going forward. Inherent in those revisions are are the increased penalties, both fiscal and jail time, were breaches of the responsibilities of the directors. And the penalties have gone from pretty much nothing to 5 million. They're quite large. One of the concerns that we came across again and again, because one of the things we were discussing with them is directors and officers liability insurance, which would speak to those penalties.
Yes.
One of the concerns that we got again and again when we met with insurers and with bankers, they said, we are not going to be able to get people to serve on our board if some of these draconian penalties go in, because it's exactly what we spoke to with regards to the quality of staff that you can get and the qualifications. I think that the statistic is less than 3 people have passed their ACII in the last 5 years in this country. And the officers that we met at these insurance companies said that once that act passes, if it stays as it is currently structured or designed, they said half my board is going to resign. Now, that could be perceived in a positive light, saying, well, your board should be doing things that, that don't send them to jail. But also there is a concern that your staff, vicarious liability says your actions of your staff attached to yourself. And I think there's a real concern that not about the monetary punishment, but 5 years jail term is usually attached to a fairly heinous criminal act. And do you find that, are you concerned with that change in legislation, that criminalization, that's the wrong adjective, but those increased penalties, if that is going to cause, again, a whole bunch of directors to resign from the insurance sector?
I know that one element of the new legislation that has been subject to tremendous discussion is this area of penalties and fines and penalties and so on. And you're right, we are coming from a situation in which the central bank's hands were totally tied. The central bank could do nothing. Let me give you an example of what happened. I mean, the old legislation would say that you're supposed to, 6 months after the end of the financial year, you are supposed to submit your financial statements, your audited accounts. So nobody does it. Nobody does it. So you ask them to put it off. You ask them, you try to get it and so on, and they say, I would send it next week, I would send it next month, and so on. And there is, if you have very little, I think it's $2,000 or $2,000 fine or something. Something very small. So we thought that let's make use of a loophole in the law and take an insurance company that had set in their records late for 5 consecutive years. So we went to court. 6 months after we got a court date. In the 5th month after that, the insurance company submitted the report, which by now is a year and a half late. The court said, but you got it? What are you talking about? What you want me to waste time? You got it. You got it 18 months late. The point I'm making is that the old legislation had absolutely no sanction for anything. I know we have had a long, tortuous discussion with the insurance industry on giving teeth to the legislation through sanctions, and 2, deciding on an appropriate level of fines. My understanding is that the level of fines we have now in the draft insurance bill are exactly those we have in the new FIA, the 2008 FIA. That's my understanding. Huh? It is, right? That's what I think, right? Now, I I heard recently that there could be some little issue about the jail term and so on, but that was not put in by the central bank. Let me just leave it there.
I'll be honest, I met with a lot of these executives, and their concern was not
the fines. Yeah.
The fines. Their comment, and I mean, at one point you can say, well, don't do anything wrong and you won't get into jail. But their comment was really a fine of 5 years in jail. And it doesn't say either or.
Yeah.
It says 5 million and 5 years in jail. Their comment was, you know, you can not bop off somebody, but you can commit a serious criminal act and spend a little less time in jail.
Trust me, the central bank doesn't propose the jail time. No, no, we haven't got into that yet.
Do you have any estimation as to when the Insurance Act will possibly become law?
Good question, huh? Well, we had to hustle it through the presentation before December last because it was part of an IDB project. We thought that it would have been discussed early in the new year. Clearly, it's competing with all sorts of other pieces of legislation. I would hope, I think the law is that if it gets past the current, the recess, if it has to be passed before the House goes into recess, or else it lapses and then you must start again. So we are hoping that it is debated and passed before, I think, August, is it? August, right? Yeah. We are hoping. But again, it's not our call.
Right, good. Ladies and gentlemen, thank you very much.
Good, thanks.
Let me go.